Do, 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 do. cpst. All right. Capstone Turbine Corp. Oh yeah, that seems fast, fast, fast. On the Nasdaq. And honestly, doesn't look like much, right? Ooh, timber, roller coaster, whoa, to the moon, down, and up we go again. No, wait, down, and look at that. This looks super duper flat. So what we gotta do? Put down the center, give us the margin, and let's explode. No, let's do it the other way. Let's explode the price action. What? There you go. Bam. So this is the past 2 years, 27 months. And check it out. It didn't look like much, right? On the when you had that big hill at that $90. So you got to be really careful with how the chart tries to fit the data for the range of time, and then it puts a high watermark, and then the low watermark, and that's how it has to zoom in or zoom out. And then you could have thought, well, this stock's dead. Well, zoom in. And this is what's interesting as the past 2 years right now, because it's been consolidating for like that. Oh, so again. Yeah, for the past 2 years, and this drop, and this is the base. Let's go back. What, Patrick? My eyes. What are you doing? Okay, all right, I'm back. And I'm on the monthly candle chart too. See where the defined resistance is, where the defined support is. And see what close do I need above. So what I need on the monthly candle close is a close above 171. So if I get a close above 171, and wow, look at that. The target's too far away. Look at the size of that arrow. It's not about the size. See? It's all an illusion. Oh, look. It's all an illusion of the chart. So that's one thing just of understanding right there. How your brain interacts and reacts to what it sees. And to do that, play around, fiddle, squeeze, like a kid playing with Play-Doh. He sees a ball of Play-Doh. You could just like roll it. But then when he understands that he's able to squish it, flattening out, then you could just throw it as a disc. It makes you see different things. If you know you could play with it. It's still the same mass. This is still the same price action, still the same chart. But the way you look at it, it's different. And this would be the target just if I do it with my good old-fashioned classic chart trading framework based on monthly candles. So this is it, guys. 171, close above that. And we have a measured move to 282. And that monthly candle is coming up soon, guys. Next week. We have it next Thursday, end of month. So close. One more week. But the main reason I'm doing this is because I want to go and see on the weekly, applying stage analysis, Stan Weinstein's framework. And now that we know what we need on the monthly candle chart to define the direction of the wind, then we're going to go look and see on the weekly what we need. And here, if I zoom in, let me do it this way. There you go. Better. Better? Could do better. Zoom in even more. Okay, here we go. So Ichimoku cloud, if you're under the red cloud downtrend, above the green cloud uptrend, green cloud is support, Ichimoku defined support, and red cloud is Ichimoku defined resistance. So now nothing in there, nothing in the way for us. I'm gonna make that disappear. Stan didn't have that. I'm using that as a recommendation from ISA Trader on stageanalysis.net, and it helps more clearly see the overhead resistance that you might run into. Because Stan always says make sure you have no overhead resistance close by or under support if there's a breakdown. But after that, your brain, what's close, what's far, you could cheat yourself and say, well, that's far enough if you really wanted to trade, So that's kind of a guideline to, if you pass that test, it just adds a extra check mark to your stock entry. Look at that. Look at these candles. Here it's starting to pick up. Already a breakout here. It's under the Ichimoku cloud. All right, I'll put it back. Because I already forgot where it was. See, it's right here. Already under the Ichimoku cloud, but Stan, he could have entered here. Horizontal breakout line. Above 30-week moving average. Look at that volume. You need twice the average of the previous 4 to 5 weeks. You have it here. It's already starting to go up crescendo. And look at that, guys. I know it's scary. You get in on the breakout. And then you say to the moon. There's no overhead resistance right back here. And if you didn't look at the Ichimoku cloud. But what happened here is it pulled back on contracting volume all the way back down to your breakdown line. If you're an investor, you would have put your sell stop below the bottom of the pattern, below round number. If you're the trader, you would have put it below the 30-week moving average, below a round number. And if you want to be extra safe, below the candle's wick of the breakout candle. But it's still risky. You could have got whipsawed. So now you see it go up, and then after that, goes back down. Contracting volume, not that bad of a feeling. But still, you're in a trade. It's like the timing, you're just off. And why you're off? Well, if you had the Ichimoku cloud, you could have seen that you had some overhead resistance. So it has to work its way through it. So you're in there, and all the time you're in this trade here, even if you don't get triggered out, emotional landmine time. The longer you're in the trade, the more chances you have of landing on an emotional landmine. The longer you're on the battlefield, the longer you have a chance of getting your head blown or yourself landing on a mine and just exploding. It's that simple. The basis of stage analysis, you go in on a breakout with a high volume, and it doesn't stay long like this. This is like, there are some fails, but it should pull back within 1 to 3 months, and after that, it should have went back up. But right now, it was just not mature at that point, and time moved on, and you would have had to wait wow, that's a long time. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 12, 20, half a year, 3 years. No, about a half a year, almost 1 year. Anywho, so what happened here after that? In another consolidation pattern above a 30-week moving average, and this time 30-week moving average is starting to etch upwards. And look at that volume, this candle here. Now it's starting to be more mature. The chart is starting to tell you, okay, this one failed. The resistance is starting to fade overhead. Breakout. You're in the breakout candle. Oh, man. Next week goes down. You see? Important to put your sell stop the investor's way and not the trader's way. Trader's way is really tight. And then you could have gotten triggered out here on these candles. And then this is the regular pullback on contracting volume. See these two candles, pullback on contracting volume within 1 to 3 months. It happened here, 1, in the first month, and then start going back upwards on expanding volume. That's very sane. See, pullback candles, contracting volume. And right here, what happened? Jesus, this one? Yeah. Breakout patterns. Within breakout patterns, it's all about, in classical chart, well, you have all the patterns, and then you have the implied measured moves, the breakout lines. And stand systems, it's all about consolidation patterns, horizontal breakout lines, 30-week moving average, and volume on breakout candles. And right here, you're starting to see it's almost twice the average of the previous 4 to 5 weeks. This candle right here, a lot of things happening here for this cpst. Very constructive for the upwards continuation moves. And after that pullback, close to the breakout line on contracting volume, and after that expanding volume again. These two candles, almost twice the average of the previous 4 weeks. This one also. And after it gets here, pulls back, contracting volume, and now it seems to be expanding again back to this breakout line. So this situation is a repeat of the previous breakouts. So if we have that close above 171 on the monthly, that's a confirmation that the monthly, we have that target that we set previously up here at the 282 on the monthly candle chart trading framework. But it also tells us that we have the power of the monthly trend with us. Gives you confidence to enter Stan's system on the weekly, on the smaller time frame, less chance of getting whipsawed. And now by here, remember this candle back here, which was the breakout above the Ichimoku cloud. Right here, it gets pulled back on the weekly, not because of Ichimoku cloud defined resistance, but because of monthly defined resistance. That invisible resistance that you don't see on the time frame you're playing with. If you go up on the one higher time frame, and then you'll run into you'll fall into this there, the monthly defined resistance. It's invisible. You don't see it on the weekly because there's no candles that are really there, or you're instead of looking at 5 years, you're looking at 1 year or 2 years or 3 years, or there's a lot of chances that you miss it. It's so far off period wise, like period being one candle, that you say, it's too far, it doesn't count anymore. Well, on the weekly, maybe it doesn't count, but it's still there. So on the higher trend, if you have a pullback, some resistance along the way on the weekly, why is it pulling back there? Why I don't have overhead resistance? Well, there is overhead resistance, but just on a higher time frame. But it's okay. You meet it, you pull back, then you're going to go test it again. And that's where we are now. And that's going to be a very, very nice next week. If that candle at the end of May, that's pretty cool the next week. End of May candle, end of week candle of the last week of May. And if we get one, the volume bout like this, twice the average of the previous 4 weeks, with that close above 171, A+++ setup. A+++ setup. So this one, guys, sometimes I do these podcasts and I forget to come back to those charts. And this one, definite time to go back. All right, guys, Capstone. It's already in the stage 2 at a stand. And now just awaiting confirming on the higher trend. And when we get that confirmation, time to jump in. All right. See ya.